In my latest article on Taiwan Semiconductors in October 2024, I stated that the company was overvalued at the time because of the run-up mainly caused by AI euphoria. Over the last months, TSM shares have, however, declined significantly from their highs, meaning that my sell rating in October was timed very solid. While medium-term volatility is common for TSM, this decline seems to not be caused by worse-than-expected business fundamentals. It is rather originating from macroeconomic uncertainties, the looming trade war, and a broader market rotation away from growth stocks. However, when the dust finally settles, the company continues to be the sole leader in providing state-of-the-art semiconductor manufacturing equipment that is needed to power AI, and one could even argue the world's future. Required growth. If the profitability as well as the free cash flow conversion stay constant at the average of the last 4 years, the company needs to achieve growth rates of 15% per year for it to trade at fair value right now. Growth prospects. TSM is generating revenue in different business segments, with the most important one being the high-performance computing segment. High computing power, energy efficiency, and sophisticated node technologies, 5 nanometers and 3 nanometers, are necessary for data centers, AI, as well as other complex applications. Apple, NVIDIA, AMD, and Broadcom all rely on TSMC's competence for their chip manufacturing. Considering that the global AI market as a whole is expected to grow at growth rates ranging from 29.2% to 36.0% per year, an expected revenue compound annual growth rate of 30% per annum in this segment seems very achievable for TSM. In the other relevant segments, experts anticipate these average growth rates. The Internet of Things or IoT segment also seems promising for the company. Weighing these different growth rates with the revenue share of the latest quarter, we get an anticipated revenue growth rate of 21.2% per year for the whole business of TSM. This is also pretty much in line with the guidance of TSM's management, as they expect growth in the mid-20s% for 2025 and a rate approximately 20% from 2024 to 2029. Valuation. If we now plug the calculated growth rate of 21.2% per annum in our valuation analysis, we get a fair value cap of $1 trillion, indicating a potential undervaluation of up to 50%. Risks to consider. Geopolitical risks. In TSM's investment case, this risk is the most mentioned, as TSM is the focus point in the tech-heavy tensions between the United States and China. The heavy dependability of TSM on outside resources in their supply chain could also be threatened quickly by possible escalations between China and Taiwan. Should Trump keep his tariffs in place or continue to impose random tariffs, this could also negatively impact TSM's business. Cyclicality of semiconductor demand. Despite the long-term secular growth stories of AI and HPC, the semiconductor sector is nevertheless vulnerable to cyclical downturns. Shipments and profits may be momentarily lowered by inventory adjustments, slow consumer demand, or overcapacity. Conclusion. In my analysis in October, the company seemed to be overvalued, even when considering rather optimistic growth rates related to the increasing adoption of AI applications and the caused demand surge of sophisticated semiconductor manufacturing equipment. Today, however, things have completely changed. With a YTD correction of approximately 30%, the company is presently significantly below our current fair value market valuation of $1 trillion, suggesting a potential upside of 50%. TSM's market position, however, hasn't changed a bit, as they are still the only foundry that supplies cutting-edge chips in large quantities. This leaves customers no choice but to continue to buy at TSM. Therefore, I am upgrading my rating on TSM from a sell to buy. I believe that the company is currently offering one of the best asymmetric opportunities in large-cap tech for investors that are looking for mission-critical companies at a good price. I am therefore using these prices to expand my already existing position. What's your perspective on the stock? Let's discuss in the comments.